welcome. You have tuned into Buy Now, Sell Now on ET Now. I'm Shrishti Sharma and with me Cheryl D'Souza. And viewers, this is the show where you get answers for all your stock-related queries. In a short while from now, we will connect with our experts where you get a chance to connect live with us on a WhatsApp number that will be flashing on the top of the screen. But before that, don't forget that today is Friday and today we're going to be getting you Buy Now, Sell Now Pathshala as well with Kunal Bothra in a short while from now. But before that, let's have a look at what the markets are up to. The Cheryl, the bulls are seen to be taking in charge of the markets, and what a recovery and what a move in the index today.
Absolutely, great moves coming in for the index. But before we move on and talk about what the markets are doing, let's actually take note of the flash at the bottom of the screen. And Tata Consumer, as expected, has gone ahead. They had a board meet and they've decided to raise about 3,000 crore rupees this wire rights issue, and also they will be raising about 3,500 crore rupees this via the issue of commercial papers. And they've also mentioned in the release that the amount up to 3,500 crore rupees that they will be raising via issuance and allotment of commercial papers will be utilized to bridge the funding to facilitate the payments for the of consideration for proposed acquisitions of stakes in Capital Foods as well as Organic India. Remember, last Friday itself, post the market hours, we got the news or confirmation on our ET Now news break that Tata Consumer is actually going ahead and will be purchasing the 75% stake, a controlling stake that is in Capital Foods, as well as they will be acquiring Organics India. This is from Fab India family. So yes, today they have actually gone ahead. They had a board meet where they actually thought they've considered raising funds in order to go ahead and bridge the funding for these particular acquisitions. And what they're saying, they are going to raise funds through issuance and allotment of commercial papers for an amount not exceeding 3,500 crore rupees. This will be used to bridge the funding to facilitate the payment for the acquisition of Capital Foods as well as Organic India. While another way of raising funds will be 3,000 crore rupees, up to 3,000 crore rupees via rights issue. So that's the latest that is coming in from Tata Consumer on the fact that they are now looking to be a wholesome FMCG company, and this is just a step in the right direction. As you can see the stock on your screen, 1% higher right now, Shrishti.
Well, yes, and that was indeed an ET Now exclusive. And then we are seeing that the company is looking to raise funds via the right issue. But moving on to the rest of the markets then and having a look at the index level, what a move that we have seen in today's trading session. 162 points of gain coming in for Nifty 50, while for the Bank Nifty at one point in time we have gained around 500 points. And outperformance is what we are seeing in the banking index today, led by definitely HDFC Bank has seen some recovery, Axis Bank. But on the flip side, IndusInd Bank was one of the result candidates that is the biggest drag in Nifty 50 as of now. The broader markets are too supportive in full roll, and a lot of F&O counters that are buzzing. Aarti Industries, India Mart, Oracle Finance, and second day of gain coming in for all these index. So that's on the market level. But with this, viewers, let's move on and let's get you the Buy Now, Sell Now Pathshala with Kunal Bothra, and let's go across to him directly. Very good morning, Kunal, and take us through the topic. What an interesting topic we are seeing, alternate breakouts. We have just about breakouts happening from you or the breakdowns, but what's the alternative method to go ahead with this?
Thank you, Srishti, for that. So, yes, today's topic is a slight bit different. It's alternate breakouts, because a stock which goes into an uptrend, we've seen historically that breakouts are when the stock gets into a breakout, doesn't retest the previous breakout or the support point, but then it keeps on moving into a different tangent altogether. But this time the chart structures are a bit different, because this tells you that how breakouts they generally pan out on a very realistic basis for stock prices. So we look at two examples over here. The first one is again, both the examples are on the mid cap front. The first one is JSW Energy. Now this is the classical sign of a breakout for stocks. So as you can see, the stock breaking out of the previous swing highs over here. This was the previous swing high. The stock goes into an uptrend, makes a new swing high, again comes back to retest the previous support. In this process, the stock tries to protect the previous low which has been made over here. So in the formation, it forms a breakout, goes into a retest, doesn't break below the previous swing lows. Then after a few days, weeks of consolidation, the stock gets into a second level of a breakout. Again, post the breakout, the stock gets into a further phase of correction. But in the phase of correction, the stock again tends to protect the previous swing lows which has been made. So this is a classical sign of breakouts trying to help the stock moving to a new tangent altogether. So from a range of 300, 350, the stock moves into a range of 350, 450. And now recently with the stock is inching towards a breakout close to this 500 mark, so which means post the breakout of this 500 levels, the previous swing lows of 450 could act as a major support for the stock. So that's a classical sign of how breakouts shape up. In an ideal scenario, we expect that post the breakout, the stock doesn't break below the neckline level, but in an alternate breakout method, it's very important for the stock to try and take support of the previous key demand zones for itself. Another example which you have is one of the stocks which I've been highlighting earlier, that's Poonawalla Fincorp. Again, a classical sign where the stock gets into a breakout mode. Post the breakout, the stock goes into a rally, retests the previous supports. The supports which are made are on the higher side for the stock as compared to the previous support levels, even as you can see. And that's a classical sign of how uptrend builds up for stocks. Now, in this case, if the stock breaks past about this 505 odd mark, we could be looking at this new base of 470 acting as a fresh support. So this is how you trail the stop losses, keep on riding the trend, and try and take advantage of an alternate breakout in stocks.
Alright, so that's all about alternate breakouts. Then Kunal, can I assume that next Friday will be alternate breakdowns? Is there some concept like that as well?
Yeah, of course. There are phases where alternate breakdowns happen, but hopefully we should not see that in markets.
Hopefully not, but yes, definitely we'll have Kunal touch upon that particular topic. But on that note, we slip into a break on this edition of Buy Now, Sell Now. And when we come back, we'll start taking your query, viewers, so don't go anywhere. Welcome back. You're watching Buy Now, Sell Now on ET Now, a show where we get you answers for all of your stock-related queries. As you can see on the bottom of the screen, the markets are off the day's highest point as of now, 0.4% downtick coming in for the Nifty in particular from the day's high. Let's take a look at what Nifty Bank is doing, and let's see if Nifty Bank also has given up some of those early gains. We remember that the financials were leading today as well, but Nifty Bank... that particular, there you go, that one also is significantly off the day's highest point. Nifty Bank down about 300 points from the day's high. As you know, viewers, this is the show where we get you answers for all of your stock-related queries. You can write to us on the WhatsApp number that's flashing on your screen. Do remember to mention your name, the stock that you're looking to invest in, mention that name as well, the buy price, the quantity, as well as the time horizon. Our experts will be able to help you better with the fact that if you mention the time horizon. And talking about our experts, today we have Kunal Bothra as well as Avinash Gorakhshekar joining us on the show. Very good morning to you, Kunal, once again. And good morning to you, Avinash. Thank you so much for joining us on ET Now. And let me take the first query. This one is coming in from Sangeeta Gowda, who's writing to us from Bangalore. And Kunal, she wants to know about Tata Elxsi. She has about 2 shares only in this particular counter, but at a price of around 7,689 rupees per share. She wants to know what should she do with this counter right now.
I would recommend a hold on Tata Elxsi. I think the stock has done pretty well for itself, gone through a major price correction, time-wise correction. But from a near-term play, I would probably look at a cap of maybe 9,000 to 9,500 as a target. So you can continue to hold on, maybe in the range of 9,000 plus, you can consider booking out profits for Tata Elxsi. And then I think once that process is completed, you can look to buy back on phases of correction for the stock.
All right, moving on to the next query, and this one is coming from Satya. And Avinash, he wants to take on 2 counters, Century Textiles as well as Trident. Any of the stock that you like at this point in time for a fresh investment for a 1 to 3 years investment horizon?
No, I think Trident looks attractive from a long-term perspective because textile as a sector has started getting a little interest from investors, and I think cotton prices, which had peaked out last year, have actually started peaking out. So once the raw material price comes down, I think Trident is a very large player in the textile space. It has got an integrated facility, so I think investors who can take a 12 to 15-month call. At the current level, despite the fact that the stock has underperformed, I would believe that some small buying can be suggested, looking at a 12 to 15-month time frame, and I think a decent risk reward over the next, say, 12-18 months can be possible. I think over the next 3 years, it's difficult to give you a call because cotton prices are completely unpredictable. But at least over the next 12 to 15 months, I think that kind of visibility looks quite strong.
This next one is coming in from Krishna, who's writing to us from Bangalore. And Krishna wants to know whether it's good time to enter Nestle India, Kunal. Also, if you could suggest some good stocks that he can look to invest in for a period of 1 year or so.
So yeah, Nestle I think is has come back towards a good support point. So I was looking at the indicators yesterday as well as today morning, and it seems like the stock is very close towards its oversold territories. So maybe probably give it a buffer of another 2%, 3% or max 5% from current levels as a downside, where the stock may eventually make a medium-term bottom for itself. So I think if that's the case, you can consider buying at current levels, and in case if the stock dips down by a few percentage points, then you can continue to add there for the stock. Few of the other names which I've highlighted earlier, I think Poonawalla Fincorp is something which I'm bullish on, even from current levels, expecting a second level of breakout for the stock. You can also look out for more tire names. I think JK Tire is also completing a breakout on the swing charts for a medium-term play.
All right. The next query is for you, Kunal. This one is from Tushar from Delhi, and he wants to know: is this a good time to invest Natco Pharma for a medium term?
So Natco Pharma is one of the stocks which has done quite okay. I mean, I would not suggest that it's been a rank outperformer from the entire pharma pack. But then the last 6 months, 9 months, from 525.25, the stock went up to 900, and now from 900, it's trying to settle into a range around this 800 mark. Very recently, I think last month or so, the stock has come back from a correction of 750 levels. So, which means that 750, 900 broadly could be a range for Natco Pharma. It's a decent chart from a longer term perspective, but from a short term play, I would just expect that the stock may consolidate. So, you can continue to hold on if you're a long term investor.
All right, this was coming from Jaya from Bangalore for you. Avinash wants to know whether it's a good time to buy Power Grid at current price for a longer term. Also, what's your view on RPP Infra? She's saying that this particular counter keeps hitting upper circuits.
No, I think as far as Power Grid is concerned, I think it's a more stable counter. I mean, if investor can take a 12 to 18 month call, power generation as well as power distribution are themes which the market has always liked. And I think there's going to be a huge, supply constraint, which would actually help Power Grid, capitalize on its assets. In fact, they have been using their assets very effectively for, the 5G network also for towers, which basically has added to their revenue and bottom line. As far as RFP infra is concerned, I think it's always better to invest in companies which don't attract circuit immediately, because normally whenever a stock hits a new circuit every day, I think you got to be very careful. Otherwise, fundamentally the company appears to be quite good. If the investor has an investment approach, I think even at the current level he can buy. But I would suggest that purely looking at the circuit, one should never invest. So probably if one has a 12 to 15 month kind of time frame, even RRP infra looks decent. You could get a decent risk reward over the next, say, 12 to 15 months.
All right. The next query is for you, Kunal. This one is from Gautam from Mumbai, and he wants to know that any of the banking names that you like at this point in time for a 12 to 18 months investment. He has names like DCB Bank, Federal Bank, IDFC First Bank in mind.
So yeah, good names which you have. I think you can continue to hold on. PNB, I'm not sure if you have that in your kitty as well. That's another stock which you can consider buying. Maybe on dips, not exactly at current levels, but I think if it say dips down to 95 odd range, 90 to 95, that's a good zone to try and add the stock as well from a long term play.
All right. This next one is coming from Anant Nayak, and he wants to know about Birlasoft. He has 40 shares at the counter at a price of around 267 rupees per share. Avinash, how does this one look to you right now? And do you think he should stay put with this, given the fact that he's making significant profits? Makes sense that stay put or book out profits?
No, I think he's got a very good margin of safety here, Cheryl. I think at least some part profit booking would be advisable, because he's already made 4 times his capital. And I think most retail investors forget that, paper profits have got no meaning. You have to convert them into actual cash flow. My suggestion is book at least 25% of your holding, and the rest he can hold on for the next 12 to 15 months, because growth numbers could definitely improve. They have got pretty large kind of contracts, and I think the traction which we could see in the next 6 to 12 months is quite positive. But nevertheless, I think some profit booking will help the investor recover his capital, and the rest of the quantity he can hold on for the next 12 to 15 months.
Right. The next question, Avinash, is coming from Praveen, and he's holding 500 shares of Adani Wilmar from a price of 390 rupees. Is that a hold or sell at this point in time?
No, I think one can hold on, see, because this is a branded business, and secondly, the management commentary has been very clear that palm oil prices have come down. Although December quarter may not be great, but I think if you look at the next 12 to 18 months, I think the kind of products and the kind of penetration which this company has been making, I think sooner or later, I think margins will improve. So I think, investor need to give in a little more time here. I would not be surprised. There have been some reports also in the market that Adani Wilmar might be sold off to a strategic investor. Now, if that happens, at what valuation it happens, to whom it is sold. Now, these are things also which could re-rate the stock. So I think it's better to hold rather than booking a loss here. I would believe that the investor needs to give in a little more time, roughly about 12 to 15 months, and he could expect a decent risk.
SK Saran wants to know, Kunal, what would be the likely entry points for Apollo Hospital, Bajaj Finance, as well as SKF? Any two out of the three?
So Apollo Hospital, SKF and?
Bajaj Finance.
Yeah, so for Apollo Hospital, I think current levels is good enough. In fact, I think a couple of days back I had given a buy call on Apollo Hospital, expecting a target of 6100, 6180 for the stock. So it looks like that the stock is now inching towards a breakout of 6000 mark. Looks attractive. Bajaj Finance on the other end is a tricky stock as of now, because when I look at the stock patterns, the last I think 2 months of the underperformance for the stock, mild rallies, but failed to convert those mild rallies into any kind of a major trend. I would probably sense that the stock may get into maybe one more phase of correction is left for the stock. So I would suggest to wait out for confirmation whether results could be a trigger for that phase, or whether the stock gets into a recovery and breaks past above the previous swing highs. But the probability of the stock going into a correction is pretty much on the higher side. So I would suggest a wait on Bajaj Finance, and maybe if the stock corrects towards sub 7,000 levels, that could be a point where you may start considering the buy.
Okay, so that's the take coming in on Bajaj Finance. But with this, viewers, it's time to once again slip into a very short break. Don't go anywhere. We'll be right back. Welcome back to Buy Now Sell Now show, where we get you answers for all your stock related queries. And today on the show we have Kunal Bothra as well as Avinash Gorakshakar with us to guide you better. We're moving on to the next one. And Avinash, what's your take coming in on Shalby? Because Kabir Bedi has more than doubled his money in this one. He has purchased 1250 shares at a price of 128 rupees. Is this a good time to book out profits or continue to hold on maybe for another quarter or two?
I think he can continue to hold because Shalby is one of those hospitals which enjoy the highest margins. And I think, they have been doing a lot of initiatives like introducing new products and services, which I think are going to get fully functional in the year FY25. I think, earlier the stock was undervalued. A lot of funds were not present, but Mr. Vijay Kedia, a very well-known HNI, has also invested money. He has been deputed as one of the directors here also. So I think, now the stock is clearly in strong hands. And I think, the investor can take a chance. He can probably wait for another 6 to 12 months because hospitals are definitely very strongly favored by the markets as on date. So I think you would expect very strong numbers in FY25 also. So I think he should hold on. He could get a target price of roughly about 350, 360 if he can hold on for the next, say, 6 to 8 months.
All right, this one is coming in from Neha. This one is for you, Kunal. Neha has Hero MotoCorp at a price of around 3,288 rupees per share. She's saying that she's making approximately 30% profit on this particular holding. She wants to know whether she should book profits now or continue to hold on to it for a period of 3 to 6 months.
I think you should continue to hold on for because if you have the time horizon of 3 to 6 months, my sense is that many of these auto stocks can stage probably one more leg of rally for themselves on the upside. And I think many of these auto stocks, except for the case for Maruti, which is a different stock altogether, many of these stocks have actually participated quite well, and they still look very strong even in this phase of correction. So I think you should continue to hold on.
Okay, moving on then. And Avinash, any take on Dixon Technologies? This counter has been focused on the back of the news, a negative news flow coming in, and Tara wants to know. Tara is already holding the stock, but she didn't share her buy price. So should she continue holding this one, or at this point in time you believe that she could further go ahead and accumulate more of Dixon Technologies?
I think, Shristi, in most of these companies, whenever there are negative news flows, the stock underperforms. Like just recently, Polycab came under significant pressure, but yesterday we saw very strong numbers. I think this development for Dixon also will be very soon forgotten. And I think if the investor has a 2-year kind of timeline, then I think one should not worry. These are small breaks in the overall investment journey. And I think investors need to be a little brave enough to accept this volatility. So I don't think the story is completely finished as far as Dixon Technologies is concerned. It's a very big player in the outsourcing market. And I think the opportunity for growth still is pretty solid. So I think keep a time frame of 2 years and continue to hold. And if at all you have some surplus money, I mean, you can obviously, buy into the dip, but keep a time frame of at least 18-24 months to get a decent risk reward.
All right. This one is coming from Sonia from Delhi, and she wants to know at what price should she actually look to enter Bank of Maharashtra? Is further correction expected in Nifty Bank? Also, another PSU company that she can actually look at. And apart from her, I believe one more query we had on Bank of India from one of our viewers. Let me just try and pull that up. He also wanted to know about Bank of India because he already invested in it, or rather, what at the price that he wanted to invest in. I think I skipped, missed that particular counter. But Bank of Maharashtra, what price can Sonia enter, Kunal? And I have another query for you, similar to that, actually, Avinash. This one is coming in from Abhishek, and Abhishek wants to know between Bank of Maharashtra and Bank of Baroda, which one do you think is a good bet for the long term, say 5 to 10 years? First, Kunal.
So I believe you should consider buying Bank of Maharashtra at current levels. I don't expect a major correction into these stocks. In fact, my belief is that many of the PSU banking stocks are now gearing up for a very strong and a decent breakout for themselves going forward. So I think in that aspect, you should probably try and have a decent exposure into PSU banking names. Bank of Maharashtra could be one of the stocks you can consider buying, or consider to look at Union Bank, Bank of India, J&K Bank. Many of these stocks are also quite ripe in terms of a breakout, and of course the large cap or the heavy weighted names on the PSU banking stocks. So I think I would probably reserve my comments there that you should look to consider buying the stock at current levels.
All right, Avinash, what's your take between Bank of Baroda and Bank of Maharashtra? Which one is a better bet to take in the longer term? As well as I found that another query. This one also, in fact, is coming from an Abhishek, and he wants to know about Central Bank. He had purchased a level of 19 rupees per share. What should he do with this for the longer term?
No, I think I would also concur with Kunal's view that Bank of Maharashtra looks attractive, because considering the fact that it still is underowned by the larger institution and funds, and I think there's a good amount of opportunity for a stronger kind of performance in FY25. In fact, in Q3, their asset quality has improved, their disbursements, their loan book growth has actually touched new record levels, and I think the kind of technology spends which this bank has done is quite amazing. Of course, they are largely present in Maharashtra. But I think the bigger trigger is that going forward, there could be a possibility that this bank could be taken over. I think the government is very serious in getting some strategic investors. So probably, I think, 50 rupees, there's nothing to lose. I think if the bank continues to do well, you could see levels of 65, 70 over the next, say, 12, 15 months. And as far as central bank is concerned, again, I would reiterate that, smaller banks would definitely continue to do well, because clearly, I think the broad trends in the economy clearly show that corporate capex from private companies, government spending on infrastructure is increasing, and asset quality has improved significantly for almost all the smaller as well as the larger PSU banks. So I think he can continue to hold, but I think the better bet would be Bank of Maharashtra, because it's got a decent kind of structure, a good kind of positioning in the state of Maharashtra, and I think one could definitely expect a decent risk reward, provided you can spend another 12-15.
All right. The next query that I have, Kunal, is coming in on Viatech Vabag. He's been holding 300 shares. The viewer name is Mahesh. He's been holding 300 shares at a price of 354 rupees, sitting at a great profits in this one. But is this a good time to book out profits, or should he continue to hold?
Continue to hold on. It's not as if the trend for the stock has been impaired. I think the trend is quite strong. The patterns with the stock has been making over the last, I think, 3 years from 2020 lows indicate that there could be a strong upside going forward also. It's a low to moderate beta stock, so you may expect that the movement for the stock on the upside could be a lot more gradual, but you've been patient with holding the stock from those 350 odd levels of a purchase price, and I think at current levels it makes a lot of sense to continue to hold on.
All right, this one is from Ashok Baid, and he has 450 shares of Navin Fluorine at levels of 4,484 rupees per share. Avinash, what should he do with this particular counter?
No, I think my guess is this is also a very strong long-term structural story. And I think despite the fact that, numbers have been pretty soft in the last 1 to 2 quarters, if the investor has a slightly longer-term horizon of at least 18 months, he should hold on. I think he's bought in at a slightly higher level. So if he wants, he can average at the current price. But I think unless he can hold on for a slightly longer time period, he would not be able to get a very decent risk reward. So at best, in the short term, the stock would remain range bound, but in the longer term, I'm pretty confident this stock could generate a good alpha and make good money for him.
Right. Avinash, the next query is coming from Rebecca from Kolkata, and she's holding 50 shares of Heikel from a price of 308 rupees. Good to hold on this counter, or can she make a switch to Poonawalla Fincorp or JSW Energy at these levels?
I think my guess is that Poonawalla Finance could definitely be considered because clearly Heikel has gone through many ups and downs. I think there were a lot of corporate governance issues. The stock has actually now turned positive. But Poonawalla Finance, I think if one were to take the next 12 to 18 months time frame, I think numbers have been pretty solid. And despite the jerk what we saw in HDFC Bank and the financials in the last couple of days, I think the stock has stood strong. Most importantly, the management bandwidth is extremely strong. And I think in terms of growth opportunity, I think the roadmap and the runway for Poonawalla is extremely positive. So I think, if she has a time frame of at least 12 to 18 months, she can obviously buy at the current levels and obviously also accumulate on every decline.
This was coming from Siddharth. He's bought NCC at a price of 175 rupees per share. Kunal, he wants to know what sort of a target should he keep in mind. He has about 104 shares of NCC and he wants to hold this for the long term.
Yeah, so again, I think if you're looking to hold the stock for a long term, then I don't think you should be placing a target over here because the stock has just very recently confirmed a big breakout. It's almost like a 8-year or a 10-year breakout for the stock. It's yet to surpass about the life high levels of 220 plus, but then I believe that in the due course of time, the stock would probably try and provide that also. So I would suggest to hold on to the stock. Technically, if you ask me, from a breakout of 220 levels and from the lows which the stock had hit in 2013 approximately, where it was almost 10-12 rupees, the potential for upside for the stock could be as much as even 300 to 350 plus on a long-term play.
Right, but with this, viewers, it's once again time to slip into a very short break. Don't go anywhere. We'll be right back in order to take more of your stock-related queries. Stay tuned.
Welcome back. You're watching Buy Now, Sell Now on ET Now. Let's put this focus on the railway counters. Then Avinash, coming to you. This one's from Thomas George from Kochi. And a slew of railway counters he's named: Concor, RVNL, Ircon, RITES, as well as Titagarh. Wants to know which one is the best buy among those for the long term, as well as he has IRFC, which is purchased at the levels of 120 rupees per share. Wants to know whether he should stay put with IRFC or exit.
No, I think IRFC you can definitely hold on because my sense is that despite being a vote on account budget this time, I think the government is pretty serious in investing a lot of infrastructure, capital in the railways, and I think that should benefit IRFC because typically 40 to 45% of the railways capex is funded by IRFC. So he should continue to hold. I think despite the fact that he's entered a little late. But I think he could definitely consider a 18 to 24 month kind of time frame because visibility of earnings is good, and I think more capex means more business for IRFC. As far as the other railway stocks are concerned, I think prices have shot up quite significantly, specifically for RVNL, for Titagarh. I think if he wants to get in fresh into some stock, then I think stock like IRCTC or something like a Texmaco Rail would offer a better risk reward because in relative terms these stocks have actually started the rally a little late. So I would believe that Texmaco Rail could be a better bet. And of course, IRCTC, since it's a platform business, very profitable, considering a time frame of at least 12 to 18 months.
All right, but with this, viewers, let's quickly kickstart the rapid fire session. And the first query is for you, Kunal. I was indeed expecting questions on HDFC Bank. A couple of viewers have asked that is this a good time to enter HDFC Bank? And one of them has been holding the stock from a price of 1600. What to do?
I think if you're holding, then no option then other than holding, continue to hold. But I think if you're looking at fresh buy, I would suggest that buy only if the stock breaks below the 1400 level.
All right, this one's for you, Avinash. Michael from Mumbai wants to know about EIH Hotels, 550 shares at a price of 245 rupees per share. Wants to know whether to continue to hold on to it or book profits. He's been a long time shareholder in this one.
No, I think he should continue to hold. I think for the next 12 to 18 months, the hospitality sector is going to do pretty well. So I think EIH should definitely do significantly better. So continue to hold.
Okay, Avinash, Debashish is asking that amongst the renewable energy space, KPI Green or KPI Green is a good bet to go ahead and buy at this point?
Yeah, I think if the investor has a 12 to 18-month time frame, I think one can definitely make a decent risk reward. Although, let me tell you, the stock has moved quite significantly. Only over the next 18 to 24 months, a decent risk reward can be taken.
Kunal, this one's for you from Ravi. ICICI Bank 1120 call option for February month at 27. Should he hold or can you suggest a stop loss that he needs to keep in mind?
Keep a stop loss on closing basis of 990 on the stock, but if you're looking at a fresh buy, I would suggest wait out for the results and post that you can consider buying.
Okay, Avinash, Sridhar wants to know, can he enter PFC and REC at this point in time? He wants to stay invested for the next 3 to 4 years.
No, I think PFC as well as REC, I think one should only buy on declines. At the current levels, I think, a large part of the upside, for the next 12 months has already got discounted. So I think wait for a mild correction, and I think then you can chip in and accumulate both these stocks.
Kunal, Angel 1, Vivek has it from the levels of 1300 rupees per share. Do you think that the rally is done for the next 1 to 2 years in this stock?
No, not for the next 1 to 2 years, but for the next 1 to 2 months, I believe the stock can correct.
Okay, Kunal Krishna wants to have a take on Tech Mahindra. He's holding 10 shares at a price of 1800 rupees. What to do? Is that a hold at this point?
Definitely a hold, but to add, I think, or to average, look out for 1250, 1300 as the range to average.
Alright, with that we come to the end of the rapid fire as well as queries. Thank you so much Avinash as well as Kunal for joining us on the show. Especially Kunal, thank you so much for actually taking our viewers through BNS and Pathshala. But here's an ET Now exclusive story for all of our viewers. The government is likely to announce a new housing scheme in the interim budget. ET Now has learned from sources that about 60,000 crore rupees incentive scheme will be focused on middle class and urban poor. My colleague Prakash is here with all the details. And Prakash, what are you picking up with this regard?
Yes, we are learning from our sources that the government is likely to announce a new home loan scheme for urban poor and middle class in the interim budget. Sources are informing that the modalities have been completed and Ministry of Finance has given its go-ahead on the proposal submitted by Ministry of Housing and Urban Affairs. A very significant development coming in as the overall size of the scheme could be around rupees 60,000 crore, wherein consumers can get a benefit of interest subvention in a range of 3 to 6%. In addition to that, urban poor and middle class can get benefit of interest subvention on home loan up to rupees 50 lakh. As you are aware that Prime Minister has already announced this scheme from the Red Fort, and since then Ministry have been working on the proposal. Some of the suggestions made by Ministry of Finance have been incorporated in the final proposal, and that could be part of the interim budget. We are also given to understand that the new scheme is going to be little different from the credit-linked subsidy scheme in terms of size of the houses and other benefits. Size of the houses could be little bigger than the previous scheme, and consumers will get some other amenities as well.
Well, thank you so much, Prakash, for getting us that exclusive. That was an ET Now budget exclusive for you all. But with this, viewers, let's move on. And as the World Economic Forum 2024 reaches its culmination, Times Network is bringing you an exclusive interview with Dr. Shyam Bisson, Head of Center and Health and member of Executive Committee, World Economic Forum, with Mihir Budd, Managing Editor of Times Network, discussing the overall impact of the pandemic and how to tackle the health emergencies and how India has emerged as a leader in healthcare space. Listen in.
I want to start with pandemic, not because it is sensational, but it is something which is still fresh in everybody's memory. And when a warning from WHO and many other places comes that the next pandemic, whenever it happens, and let's call it disease X, could be 20 times more severe than COVID. It is scary.
Yes, it is scary, but the point here is not to scare people, not to do fear mongering. It's more about how do we prepare for the next pandemic. As you said, we had a session on Disease X yesterday that was attended by the Director General of WHO, Dr. Tedros, by the Health Minister of Brazil, Ms. Nicia Trinidad Lima, as well as several CEOs. And that session was very popular, was trending on social media quite a bit, for right reasons, for the right reasons in the sense that everybody wants to know where are we with regard to the next pandemic preparedness? Disease X is nothing but a term coined by WHO a few years ago to talk about unknown pathogens, unknown viruses. So if there is an unknown pathogen, we don't know much about it. But then how do we prepare for that? How do we make sure that the health systems are there, they are stronger? We have a lot of learnings from COVID, what happened there, not just in low and middle income countries, not just in India and other countries, but also even in the US.